A spanner appears to have been thrown into the sell-off of the assets of South Canterbury Finance. Shareholders in Dairy Holdings are suing the receivers of the failed finance company. And for more, I'm joined by Bernard Hickey from interest.co.nz for this week's media brief. Good morning to you, Bernard.
Good morning.
So tell us, why is it that these shareholders have decided to sue?
This is a stunning story, really. Colin Armour, an owner of a stake in Dairy Holdings, which is the biggest supplier to Fonterra, has alleged in a High Court claim that he was essentially blackmailed by the receivers of South Canterbury Finance to put his stake up for sale as well. Remember, South Canterbury Finance South Canterbury Finance have a controlling stake in Dairy Holdings, and were looking to sell it as a whole. And Armour was the only one holding out. And so the decision was by the other shareholders to try and pull it together and to pressure Colin Armour into selling. And he's saying in the statement of claim to the High Court that this really was blackmail and that he felt he was being forced into doing something he didn't want to do. So we'll see how this plays out, but it's a real blow for the sense of unity on that board.
Well, does it have the potential to derail this realisation of assets that the receivers are trying to do in order to repay the government bailout of South Canterbury Finance?
It really puts a spanner in the works, as you say, and is a real blow for the government's attempts to get some cash back. Remember, they're looking at losses of close to $1 billion on South Canterbury Finance, and this was the jewel in the crown, really, of South Canterbury Finance. Dairy Holdings is New Zealand's largest dairy farming group, huge producer of milk in the South Island, the biggest supplier to Fonterra. There were various talk that Harvard and others would look to buy that stake. And this really is going to delay, if anything, the money that's coming back to the government from the sale of that stake.
Let's talk about the Reserve Bank. Obviously, they're reviewing interest rates today and no changes expected. But what are you expecting to hear from Alan Bollard about his take on the economic recovery?
Well, economists are saying they're not expecting the interest rate to be increased from 2.5%, its low level now, not until at least the end of this year or early next year. The question is, when will interest rates start to rise again, and what is Alan Bollard going to say about the currency? Because it's up at nearly 82 US cents, close to 71 on the trade-weighted index, near the highs that we last saw when the Reserve Bank intervened. So is the Reserve Bank intervening?
Will he give us any kind of indication on that, or does he tend to keep mum on whether or not he'll intervene?
Oh, he has commented regularly on the currency, and we'll all be watching closely in the lockup, which starts in about an hour or so. The question is, what's his view on where the long-term view on the currency is? And does he think it's sensible for the Reserve Bank to intervene? He's done it before, remember. The question is it high enough? And also, there's a risk here for him. If he decides to push the currency lower, that brings some inflationary pressures into the economy. And there is the risk here. There is using the currency to control the economy, not just interest rates.
Thank you for your time this morning. That is Bernard Hickey from interest.co.nz.